Hello investors, welcome back to the Trend Trader channel. In today's video, we're going to be talking about American companies that can pay you monthly dividends. You know, guys, we like investing. That is us giving the companies our money, and in return we expect those companies to put our money into good use, and then at some point we want those companies to reward us for giving them our money. So they can reward us in a form of dividends. Dividends is that money that comes to a company. The company generates revenue, they subtract all the expenses, they pay tax, then if there is a profit remaining, then the board of that company can decide to pass that money as dividends to shareholders. Remember, in the last video I said that we don't give these companies our money just for fun, we expect something in return. So there are so many ways that you can receive dividends. In South Africa, companies report their result twice per year. There's an interim result, and then there is a final result. So whenever those companies are giving out those results, then it's possible that the company can declare a dividend. So if you invest in South African companies, except British American Tobacco, then you are more likely to receive a dividend from one company at least twice per year. But companies like British American Tobacco, they pay quarterly dividends. So if you invest in British American Tobacco, you can expect to receive dividends 4 times per year. Then also, if you invest in ETFs, you can buy ETFs in your tax-free savings account, but you can also buy ETFs in your normal account, not the tax-free savings account. Most of the ETFs in the country, they pay quarterly dividends, even though there are some dividends that not necessarily pay dividends in the form of dividends. What they do is total return, like a money market ETF or a bond ETF. Each and every month they will declare a distribution that goes to investors, then they reinvest net of dividend withholding tax, they reinvest that dividend back into the ETF to grow the net asset value of the ETF. So even though you will be receiving monthly monthly distribution, it doesn't mean that amount does reach your account. Okay, so now, but in today's video I just want to talk about American companies. If you are using EasyEquities, you can buy these companies in your EasyEquities USD account, or if you are using any other broker where you are able to buy American companies. So these 4 companies, they pay monthly dividends. They differ in how they generate that money that they pass over to investors, and we'll be looking at the website of those companies just to give you a brief understanding what those companies are. We love dividends as well. We also like capital appreciation, but from time to time we like to receive dividends from the companies that we invest in. And if there's an opportunity to receive monthly dividends, then we are more likely we are more interested in that opportunity. So let's go and look at those companies. Alright, the first company that we are going to start with, a lot of investors already know this company. The name of the company is Realty Income. As you can see, their slogan, it says the monthly dividend company. That is because this company has been paying dividend for over so many years. And like I said, people love this company because they are consistent with their dividend payments. If you look at the numbers, we can see that the company has a dividend yield of 4.08%, and the share price is about $72 there. So if you want to get an idea, you can calculate the share that you can expect per month using the information from the current share price and also the dividend yield. But just to give you a brief background on what Realty Income is about, Realty Income, it's a real estate investment trust. As you can see, they invest in real estate, and then they take their the monthly dividends are coming from the cash flow that is generated from their property portfolio. And they say that over the past 53 years, this company has been buying and managing a property, and then they generate revenue from long-term lease agreement. Then those lease agreement, that is how they are able to generate money, because at the end of the day, you don't want to invest in a company where you don't understand how that company generates money, right? So it's important that you understand So Realty Income is a diversified or has a diversified real estate portfolio. They have over 11,000 properties under long-term lease agreement. These properties, you can find them in the 50 US states, but some of them are outside the United States. Some of them are available in United Kingdom and also in Spain. Most of these properties, they cater for retail and other industries. You can just go there in order to find more information about the portfolio or where these businesses or these properties are based at, and to see what kind of businesses that are leasing that particular property. And then they have over 1,000 different clients. And then the good thing about this company, they are able to generate this monthly dividend, and they also have managed to produce strong shareholder returns. As you can see that they say that since 1994 they've been able to have a compounded average annual return or total return of 15.5%. so this is a good number. It means that you can expect your capital, when we take dividends into consideration, you can expect your invested capital to increase by at least 15.5%. and they've managed to pay dividends for over 620 months. Then you can just divide this by 12 months to find out in terms of the number of years where they've been able to pay these dividends. In addition to that, you can see that the dividend growth since 1994 has been 4.4%. We also saw there at the top that the current dividend yield, it's about 4.08%. So this means that the company is able to try and keep that dividend yield somewhere around 4%. And then in terms of quarterly result, they've been able to increase the dividend each and every quarter for at least 98 quarters in the past. All this information you can find here when you click into these tabs, right? So when you look at the portfolio, I just want to show you the industry diversification, because it is important. We know that since 2020 or since the end of 2019, that is when we started to have challenges with coronavirus. So we want to ensure that you invest in a company that is diversified, meaning that if one sector is affected by anything, it could be COVID, it could be politics, anything that can affect a specific industry, we just want to ensure that we are still diversified, the business is still able to generate dividends for us investors. So as you can see, this they have a nice industry diversification. They are finding different sectors in the US: aerospace, automotive parts, consumer electronics, diversified industrial, energy, entertainment, food and processing, healthcare, office supplies. So you can just see that it's already a diversified portfolio across industries. But it's not just about that industry diversification. They also have a geographic diversification. They've already mentioned that they've got businesses within the United States, but some of the businesses are outside of the US. One is in Spain and the other one is in United Kingdom. So, and then also to ensure that they are able to produce this monthly dividend, then they need to have a strong client base. So some of their top 20 clients, as you can see, it's Walgreen, Dollar Green. Most of these companies that you see here, it's retail stores that have a large footprint, like Walmart. We know that Walmart is one of those good companies, old boring companies that are able to produce goods and services and generate cash consistently. So it's good to see that they have such companies. You can also see that Amazon runs distribution centers. So as long as they have a contract with Amazon and people are buying on Amazon, then you can expect this company to be able to continue to generate this cash here, right? So I've already said a lot about this company. Like I said, you can receive monthly dividends. So before you rush and ask if you put this amount, how much you're going to get, please take your time, do the calculation yourself. You already know the share price. The share price is about $72, and then they have a dividend yield of 4.4%. Then you can find information on how much dividend you can receive on a monthly basis. On average, they pay dividend of about $20. So 20 cent US cents, not South African cents. They pay about 20 cents each and every month, meaning that in a year you can expect to receive about $2.40. Then you can do the exchange rate, and then you can calculate based on the number of shares that you will be receiving. So if you buy one share, you can expect to receive $2.40 per year. If you have 20 shares, you can expect to receive about $20 or $24. So that is how you can do the calculation there. Please, people, just be willing to go that extra mile to do some of the calculations yourself. Right, so now we're looking at the result for the year that ended in December 31st, 2021. We don't have the new final result yet, but we're already on quarter 2. So the result for quarter 1 are already out. Quarter 1 ended at the end of March 2022. But you can still look at the result of the previous final year result. So starting with the year that ended in December 31, then we can see that they have a net income per share of about 87 cents. And then the normalized, this FFO is actually earnings per share. So, you know, Americans, they do things differently, or maybe even real estate investment trust, they do things differently. But FFO is just similar to earnings per share. So we can see that the earnings per share, they increased by 2.4% all the way to about $3.39 compared to the year that ended in 2021. So for the year that's going to end in 2022, we would like to see an increase more than this $3.39. And then the adjusted earnings per share, they increased by 5.9% to $3.60 there. And then when you look at the quarter itself, the quarter that ended in December, we can see that the net income per share, well, it's not that exciting. It was just 1 cent, but the normalized earnings per share, they increased by 7.2% all the way to about 89 cents for that quarter of compared to the quarter of 31st December 2020, right? So there's a lot of information that we can see there. We can also see the kind of revenue that they generated. For the year ended in 2021, they generated about $2 billion revenue there. Then when we just look at the net income per share, it's about 87 cents, and then the normalized earnings per share, it's about $3.39. That's a full year result. These are a quarterly result. So the quarterly results are going to be less than this. This is the combination of all the 4 quarter result. But long story short, this is a company that you should consider buying and adding into your portfolio. We know that they pay these monthly dividends. They are consistent with it. They generate that cash from real estate investment. And then another similar company that generate monthly dividends and also invest in real estate is STAG Industrial, but nowadays the name, it says STAG Industrial. They mostly invest in industrial properties, not properties that can be used for retail or commercial purposes. Well, I hope that industrial also falls under commercial property. But you can see we've got this company, STAG Industrial. Well, I don't want to see the management. I just want to see the company itself. I don't care about the management. So what we see here, the brief information about STAG, it's a real estate investment trust again that is focused on acquisition and operation of industrial properties throughout the US. And then by targeting the industrial, they have developed an investment strategy that help investors to find a powerful balance of income. Plus also the investors are able to generate growth from this. So we can see this business has a market capitalization of about 10.9 billion, and then they operate in 40 states. Remember, I think the US has 52 states, so they operate in 40 United States there. And then the buildings that they have, it's about 544 buildings there. Yeah, like I said, it's industrial buildings, different industries that they have there. Let's see if you can find information about those assets, not asset management. I don't want to see what kind of assets that they have. But as we can see that there's an increase in the cumulative leasing activity since 2011 when they started listing, and then each year the company keeps on growing there, and they have a retention rate of about 72%, meaning that 72% of their clients since 2011 are still their client as of 2022. Okay, then I managed to get a bit of an information there. This is a quarterly result, but also for the year that ended in 2021, not 2022. So you can find this supplementary information. It's an unaudited result for the fourth quarter of 2021. So it's not financial year, it's quarterly result. So there are some things that you can see here, just an overview of the business itself. It has 544 buildings, it operates in 40 states. And then their occupancy rate, it's about 97%, and then the average lease term, it's about 5 years there. And then the rent, they charge about $4.71 per square feet. Well, I wouldn't know how much. I'm not a property investor, so I wouldn't know what is the ideal lease price. And then there are some other finance stuff like this net debt compared to EBITDA, which is about 5 times, and all this fixed charge cover ratio. If you are familiar with finance, these things they make sense to you. But what is more important is that the monthly dividend, it's about 12 cents. Remember, these US these companies are based in the US, so it's 12 US cents, not South African cents. And then if you annualize it, multiply this value by 12, you get about $1.45. This means that if you buy a share in STAG Industrial, you can expect to receive about $1.45 per year, not per month, per year. Per month, you will be receiving about 12 US cent that is going to be credited into your stock brokerage account. So they have a total asset of about 5.8 billion there, and about 2.4 billion of liabilities. But some of this stuff is not that relevant. If you look at the number here, the revenue that they generated about 564 million revenue from these buildings. So this is the annual result, and then these are the quarterly result. Per quarter, they generated about 147 million, and then for the full year, they generated about 562 million there. And then what you can see is the net income per share of about $1.15. This is what is important to me, because if I see a positive figure here, then I know that that business is profitable. A company can have a large revenue like this, but when you look at the expenses, for instance, the revenue is 562 million, the expenses are 398 million. So that tells me that this business is already profitable. If you look at the total income, they have about 32 million there as their income. Then they pay tax and everything, then we are left with a positive figure. Then for sure, if we see a positive figure, we then expect the board to declare dividend, because there is profit after tax. Remember, the board can only declare profit after tax. In this case, I'm not talking about special dividends. I'm just talking about ordinary dividends, because if a company disposes a building or an asset and they don't want to reinvest that money into the building, they can just pass through that money to investors. In that case, the investors will be receiving a special dividend. But here we are talking about the normal dividend, or the ordinary dividends as they are called. So you can go through this information there to find things that make sense. There is a balance sheet, there's a cash flow statement, and whatever the other third statement that commerce people are using. But STAG Industrial is the other company that you can buy as an investor if you are looking to receive monthly dividends. These two are my favorite. I like Realty Income. I also like STAG Industrial. Then there are other two companies. One is a company, the other one is an ETF. So let's start by looking at the one that is a company. It's called Main Street Capital Corporation. So these people in the US, they operate as mashonisa. So for those that don't speak isiZulu, mashonisa is like a credit providers. What they do, they give funding to private companies, so they lend the money, and then when those companies they repay that interest, that capital plus interest, then it is that interest that they pass on to shareholders there. So you can find more information about Main Street Capital, but in brief, they say that They have helped over 200 private companies to grow or transition by providing flexible private equity and debt capital solutions. Then the business that they have funded are privately held business because they don't want to put them on the publicly tradable. That's why they are called Main Street, not Wall Street. And then they say that they want to build a relationship and ensure that they tailor these transactions to meet the unique need of those private companies. Then there's a lot more information that you can see. There are different, you can check all the companies that they have invested in. It's different, it's unknown companies. Like they said, they want to invest in companies that are not publicly traded. It's easy to control if you understand private equity. It's easy to control these companies. Once you list a company, there's always going to be the requirements from the exchange. Like in the JSE, the exchange will require you to do some things that you can only do if you are following the Companies Act. You don't need to follow the publicly or the exchange rules, in this case JSE, or in the US Wall Street. So you can see that it's a lot of companies that you don't know because they are privately held. Then when you go to the investor tabs there, then you can find some bits and pieces of financial information regarding this company. So for final year 2021, you can see that there's earnings release. I will show you now the documents. I've already downloaded that PDF document, and then you can see for all the other previous years. So if you go to this recent release for the fourth quarter of 2021 and also the final year of 2021, then you can see that the investment income per share is about 73 cent per share, and then the fourth quarter distributable, meaning that the dividend that they can pass through to shareholders, was about 77 cent per share. And then the net asset value, it's about 25.29. I just want to quickly check what is the current share price, because if there's a net asset value, then we can see, okay, the current share price, it's about $41.70. Remember what you said about Purple Group? We said that the share price at that case, the net asset value was low and the current trading price was too high. Again, Main Street Capital, by the look of things, it's trading at a premium, but that is a story of another day. So once again, when you look at this information, looking at the fourth quarter result ending at 2021, you can see that the net investment income was about 51 million, which equated to about 73 cent per share. And then the distributable income was 54.1 million, which equated to about 77 cent per share. Then the total income was 82.2, meaning that they had to subtract all those dividends, not dividends, they had to subtract expenses. Expenses are always going to be there. You cannot run a business without expenses. Then when you look at the full year result, then you can see that the number starts to become bigger, but that's because it is the combination of all the previous 4 quarters. In this case, you can see that they have a net distributable income of 182.7 million, or about $2.65, and then the distributable net income, it's about 193. I wonder how these two numbers differ, because even from the quarter result, we saw that the net income is lower than the distributable. The distributable is always high, but you can see that it's 193 million, which is about $2.81 there. And then the net total investable income was about 289 million. So this is good. It's nice. We see that the business is growing. When you look at the return on equity, it's about 20.3%. Again, it's good if it's greater than 20%. Personally, I'm happy. I don't know what other figure other people are interested in, but any growth that is better than that is bigger than 20%, I am interested in that. Okay, I don't see the subscript, because here they have a subscript, but I don't see where they explain it. Maybe it's at the end of the document, right? But the most important thing is that we can see that the business is profitable, it is able to generate money, and it is able to pass that money to investors. Even though here they don't say how much they are paying. Okay, they have declared monthly dividends totaling 0.65 for the first quarter, so you can divide this by 3, but they've already done that for us. Then they say that the distribution per share Before dividend withholding tax, it's about 21 cent there. Again, US cents, not South African cents. You need to take the exchange US dollar South African rand exchange rate into consideration, and also tax. How are you going to be taxed in the US and how are you going to be taxed in South Africa? Remember, it's important to fill that W8 something form to ensure that you don't pay a lot of tax unnecessarily. If you are using EasyEquities, they will have drilled into your head that you need to fill in that tax document. Okay, so now we can see that you can expect to receive about 20 cent US cent by investing in Main Street. Once again, depending on the number of shares that you're investing, this is distribution per share or dividend per share. Then lastly, the one that I want us to look at, it is an ETF, it is not a company. It's called a Nasdaq 100 covered call. The code or the ETF code is QYLD. So they say that it's a covered call. There is a place where they talk about if you want to get the strategy, how they do it. It's a 2 minutes video. You can just click there to get the thing. This is a derivative. It's a bit of a complex product. Anything can happen with derivatives, but we don't want to go deeper into the technicalities. What is important is that by buying this ETF, you can expect to receive monthly distributions, and they've been able to pay monthly distributions for over 8 years running. It has a high income potential. I will show you why they say it has a high income potential. If you look at the distribution yield of this ETF, it's about 12.16%. So that is high. That is why they say it has a high distribution potential. In addition to that, the 12 months trailing dividend yield, it's about 13.73%. Remember, the relationship between the share price, the dividend affects the dividend yield. So if the share price goes down, the dividend yield goes up, or if the share price goes up, the dividend yield can be expected to go lower. And you can already see the distribution frequency. It's on a monthly basis. If you look at the history for 2022, we can see that it's January, February, and March. So they've been paying around 20 cent US cents again each and every month. So once again, like I said, all these things you can download the where did I get? You can download the fact sheet of this company. It started trading in 2013, but it has a total expense ratio of 0.6, the TER. It is expensive by standards if you compare it to Vanguard total market ETF and stuff. But remember, some of those ETFs, they distribute quarterly, not per month. And then this one has about holdings, 102 holdings that they have, and it has a net asset value, or the price that you're going to pay for this ETF, of about $20.99, or let's just say $21 there, right? This is an actively managed ETF, so you should expect to pay a higher total expense ratio compared to passively managed index tracking, low cost ETF, blah blah blah, all those things where you have a 0.1% TER. This one is different. So now, just to give you a brief explanation, they say these covered calls, they follow a covered call or buy right strategy in which the fund buys the stock in the Nasdaq index, and then they write or they sell the corresponding call option on the same index. This sounds like a hedging thing. It's a bit complicated, but it does work. It's like we are buying shares on EasyEquities, and then you sell the shares so that you pocket the amount. Let's say you are buying shares for 100 rand. You pay 100 rand, you receive the shares. Those shares are there in your name. Then you sell the call option. You are giving somebody else a right to exercise an option in future, meaning that at any time in future, they have the right to buy those shares from you. If they don't buy them, you keep the shares. But remember, they pay you. They have to pay you now so that they can have that right in future. Right, so you buy those shares, you pay 100 rand for them, then you sell the right. The right is going to be less than that 100 rand. But remember, these are sold as contract. A lot of options, they are sold as contract of 100 shares. There is a specific amount depending on the strike price. If the strike price for that one share, it's about $2. If you multiply that by 100, it means that the premium that you will be receiving, it's about $200. The $2 is just an example. It's not a profit from the 100 that you paid. It's just an example. So the person that is buying this option will give you that $200. Then you pocket this $200. That is what they do. And if you've been looking at different social media, maybe you're on YouTube or you are reading on website from different brokers, if you go to a CFD website, they will tell you about 67% or whatever percent of CFD traders or investors, they blow up because it's risk. Same thing with option. Even though the option traders, they don't necessarily blow up, but the common wisdom or the conventional wisdom is that majority of the options, they expire worthless. So I believe that QYLD or this whatever it's called, they rely on the fact that it's possible that some of these options will expire worthless, because the options, they have time. If you buy an option now, let's say it's a call option, right? So meaning that I'm buying a right to buy Apple shares in future. I pay less now. I'm expecting that if I'm expecting the share price of Apple to go up, let's say after 30 days, then the value of those options will also increase. I can pay $2 per share. That means that I'll be paying $200 because they are sold in a bunch of 100 shares. Then I'm paying $200 today. If 15 days from now, the value of Apple shares has grown by $50, again, the value of the option will have increased. If the value of the option now is $3, it means that it's 300. Then I close that option, then I get that profit of about 100 rand. But remember, I will have paid 200, I will receive 300. It means that I'm only pocketing $100 profit. I hope that I've tried to explain options a bit. I tried to learn a bit about options, but I preferred to just stick to buying and selling shares rather than selling these options, because you can do call options when you buy, you can do put when you sell. I also don't sell stocks when I trade CFDs because I'm not comfortable selling stocks, and I also don't want to pay dividends because you can be short a position. If that company declares a dividend, then the broker will take that money from your account so that they cover that dividend. So I hope that this bad explanation sort of makes it easier for you to understand how do these options work, right? So if we just scroll down there, we can see the performance, the net asset value over 5 years, it's about 9%, and then cumulative since inception, it's about 97%. So if you bought this ETF since the inception or since the IPO, you would be close to doubling your amount there. Then we can see the top 10 holdings where they buy those companies and then write the options. They've got all the big companies like Apple, Microsoft, Amazon, Tesla, Alphabet, Nvidia, Facebook. Well, it's called Meta platform, but it's still Facebook. Costco is a good company. Broadcom, but you can see the full list of all these companies there, right? Well, this is just the what do you call this? It's the MDD. In South Africa, we call it the MDD. Let me look for the name, what they call it. It's a fact sheet. Well, fact sheet, MDD, same thing, right? So now let's go to the chart. Now we're looking at the chart of Main Street Capital. I don't have a position on Mainstream Capital. You can already see that the share price is declining, even though it's about to find support there. But I don't have a position at the moment. Let's see if we can get a pick pen so that you can draw there. Okay. Okay, so now we have a pick pen. We can just easily draw there whatever that you want to draw from this. Okay, so I said that the share price of Main Street Capital. Remember, we spoke about 4 companies: Realty, Income, Main Street, Stag Industrial, and then we spoke about the QYLD ETF. If you already have these ETFs in your portfolio, you've got nothing to worry about. Remember, we have different approaches in the market. My approach is that I want to buy a security that is on an uptrend. If you are comfortable taking your money, buying an asset that will generate a cash flow for you, what I'm about to say now might not apply for to you, but if you're also looking for an opportunity to add into your position, then it can be worthwhile to look at the charts, right? So Main Street Capital for now is just moving sideways. It's trading at $41. Remember, we said that the net asset value, well, they said that the net asset value, it is about, the net asset value is somewhere about $24. So the share price is trading at a premium. You can see it's about maybe $16 premium where it is trading at this moment. As long as it tries to remain above $38, then we've got nothing to worry about. Remember, as long as we're holding the position, we will be receiving dividends from this company. What we won't be getting is capital appreciation. Then we don't know at what point it will break above $46 and then continue to trade higher, meaning that in addition to dividends, we will be receiving capital appreciation as well. But that is the chart of Main Street Capital. So I'm just going to start with the chart of the companies that I wouldn't consider buying at the moment. So when you look at the ETF as well, we can clearly see that the ETF is nice. It is on a downtrend, but you can see here it found support somewhere around this level. So now I'm not sure if it's trying to go up, but if you look at last week, it was weak, and then you can also see the volume of last week that it was weak. So I wouldn't be surprised if the share price in the upcoming weeks it comes back to retest this $19 level. It's not a prediction. Anything is possible in the stock market. If you buy at the current share price of $20.60, you shouldn't be surprised if the share price drops to $19 per share. That's the whole point of using the chart. We're not trying to predict where the market is going to go. We're just preparing ourselves mentally that should the share price go up, then we are not caught by a surprise. It is something that we expected. Other than that, you can also expect the share price to continue to push all the way up to about $23. Again, anything is possible. You should prepare yourself mentally for any of those potential scenarios. You can already see that $20.60 used to be an area of value. So now we need to see which side the market is going to decide. Is it going to go up or is it going to go down? Even if it goes down, if you are just an investor investing for cash flow or for income, it shouldn't worry you. But if you use a stop loss, then you need to take $19 into consideration. Maybe have a stop loss somewhere around $18.50. Again, just charts, but wait, you shouldn't take them seriously, especially if you don't use the chart. For those that are comfortable with the chart, they know that risk management is important because the chart, they do not predict the future. Again, we're looking at a Stag Industrial. You can see here we've got an area of value somewhere around $34. You can already see that the share price at some point, this used to be a resistance level, and then it broke that resistance level. And then once again, as the share price was attempting to go up, this area around 42-44 acted as a resistance level. So now the share price is currently here at this area of value. Two things can happen here. The share price can find support and then attempt to break $44. If it succeeds, then we can expect the share price to continue to go up. But if it doesn't succeed, then the worst case scenario is that it's going to break below this level and most likely come to retest this $34 area. Again, just a number of different scenarios that you have to keep in mind. Don't just buy something and have this thing that it will go up. The market is not going to listen to you. You are just one market participant. The market is going to do whatever that it wants to do, depending on the number of investors that have a conviction on a certain direction. If there are more buyers and there are buyers by going to the market and buying the stuff, then we can expect the share price. But if the buyers are just buyers by opinion, they don't put their money where their mouth is, then nothing is going to move the market. So the reason why we use the chart, we want to be mindful where to expect the market to go. Then if the market goes into that direction, we just follow it. But like I said, I like STAG Industrial, even though at this moment it's not giving me a nice place to buy. One company that I bought yesterday was a trading day, today it's a holiday, but it doesn't matter because we're not trying to put a timestamp or date in this company. In this video, we just want to share information, which is the 4 companies that can pay you monthly dividends. So you see, we bought Realty Income because it gave us an indication that it was attempting to break above this resistance level there, right? So from this support level, it has been moving sideways, and then we can see from this previous about 5 weeks, we saw the dry up of the accumulation. But what you need to notice is that there's no red candle, meaning that they were, even though the sellers were there, they didn't have strength compared to the buyers. And then even though last week's candle is not that high in terms of volume compared to the previous week's volume, but it did attempt to break above this level. So what we're expecting from this, if there's a dry up of accumulation and there are no sellers inside, then we can expect an explosive move on the upside. So we have a position already. This is a disclaimer. We have a position on Realty Income. We bought more shares yesterday because we expect the share price to go up. But if the share price does not go up, remember, we do not direct the market, then we have a stop loss somewhere around $68-69, because if the share price go up, even if it goes to retest the level at 64, we do not want to be there. When it does that, we could just easily take our money and invest it in other companies that are still moving up. So that's it. We're not going to say a lot with regards to the chart, because the intention of this video was to share with you these companies. Okay, so now let's just forget about the chart a bit and then just look at the companies. So traders and investors, if you've been following this YouTube channel and you haven't subscribed, please consider subscribing. If you found this video useful, please smash that like button. Feel free to share this video. Remember, the money that is in the market, it does not belong to me, it does not belong to you. Make sure that you share this video with as many people as you can, because we can all benefit from this information. If there's a company that also pays monthly dividend that I missed, please share it in the comments. We read the comments, we respond to all the comments, then we will make a video covering those companies that we could have missed. At this moment, the companies that I'm aware of that will pay you monthly dividends are these 4 companies. It's Realty Income, STAG Industrial, that Main Street Capital, and the ETF QYLD, which is the Nasdaq 100 covered calls. It is a complicated name, but at least maybe now you have an idea of how they generate money. Once again, if you haven't subscribed, please consider subscribing. If you enjoyed this video, please smash this like button. Then we will see you in the next video.